finally seeing the markets returning to some sort of normal conditions, I would say, because finally we'll start seeing risk assets increasing, like the Aussie, the Canadian dollar, the pound, the Kiwi, while the gold, the yen and Swiss franc are falling, along, of course, with the US dollar. Now, this, of course, is due to the civil arrest in America. Not that this would actually affect currencies in any way directly, but what seems to suggest that is that the crowds, all these riots, people coming together are risk factors that could actually fuel the virus spread, and that's why we might start seeing an effect on the US dollar rather than anything else, to be honest. So despite the fact that we have all the fundamentals actually supporting gold to move higher, we simply see a profit taking, in my opinion. So most likely we're seeing the price is now coming into a level where bulls are going to step in again and push the prices higher. Now, since we have metals and energies today, I'm going to talk about the oil as well. We've seen the oil also increase. It has actually had an incredible rally, right, since the negative figure, to be honest. Now we are seeing the oil extending close to the 40 level as the OPEC Plus now is considering an extension, while at the same time, of course, the US drillers are actually restarting production as well due to the prices recovery. The API also was quite good yesterday, and we are expecting the EIA, of course, to confirm, to validate the signal from yesterday. Despite that, oil is supported. But are we going really to see the oil extending higher, or are we going to face, some more downside risks and pricing actually weakening as well because of the supply crunch that we are expecting to actually weigh on prices at some point? Well, that we're going to have to find out, and actually I think we're going to find out pretty soon. Let's jump on the technicals. I want to start with gold. Okay, guys, so on gold, we're looking at this being an ending triangle. Last week, if you recall, we looked at this double zigzag pattern here, which is we are considering this part of the ending triangle that is going to end this cycle degree correction, and then we can start looking for prices to move lower. So we said this is a triangle, and this is a wave one. Okay, so we've got ABC, we've got WXY, we're going to get another ABC, and then one more and one more. Now, the correction down here was actually identified last week, right? And we said prices will move up for wave A, B, and then C. We've done wave A in a leading triangle. Actually, it is a leading triangle in wave one, but then we'll have 3, 4, and 5, which are normal waves. There's no interaction here. An impulse move for wave A. Wave B looks to me like it's ended. That's why I pull this line down here. And what I'm doing here now, I've actually pulled out the Fibonacci tool, and I see the extension the expansion takes us to the 1777 price for wave 3. Okay, this is the extension, the 61.8. So from there we can see price then moving lower and then all the way up again for a new high to take out this move. Now on the RSI we'll have two signals here, right? One that's already come through, in my opinion, is already priced in, and the other one now is the bullish hidden divergence that is going likely to push prices higher. Okay, now of course the other scenario is that we ended up here. Okay, don't forget about that. That's minor 3, and this is leading wave 1, then this is leading wave 2, and we're going to continue higher. This is 1, 2, then we're going to break to 3, 4, and 5. Okay, so I will really stay focused on this trend line down here. Okay, and last scenario also, because I was looking at this with a different eye, if we assumed that the triangle is different, okay, compared to the first one, so we've got a triangle over here, right? So we've got this ABC, A, B, and C, and then 1, 2, 3, 4, and 5. This means that this is a flat, okay? So we've got a 3, wave 4 is going to end down here, and then we're going to get wave 5, okay? So wave 4, if this is an expanding triangle, expanded flat, so it's going to take us down to the 1600, okay? So in case we break below the level that we're looking at, we need actually to break below the 1691. 1691 break could take us down to the 16, that could possibly be an expanded flat. ABC, ABC, 1, 2, 3, 4, 5, okay? Good, now on the WTI, I mean, I've been expecting this wave to end for a while now. 1, 2, 3, 4, 5, okay, wave A, I'm expecting wave B, wave C, and then again down. Now, the thing is, over here, we've actually reached very, very, very close to the upper trend line, which is the one I'm expecting for to reject prices, right? So that said, and since we've ended wave 3, wave 4 ended also with a triangle, I'm not expecting prices to extend much higher. And I will tell you why, because when triangles break, what normally happens is that price extends this range from the breakout point. So if we place this over here, which is a breakout point, it gets us to the 3850. So 3850 means that we could get up here, okay, while at the same time we make a bottom on the RSI, okay? So if we get this signal, we're probably going to see more downside for wave B, okay? And then wave C, and then wave 5. Now, the other scenario, of course, is that we've had an A, B, and a C here, and that's going to take us up to nearly the 44, 45 level, and then start shooting for lower levels. And last but not least is the scenario that we've ended this move down here, and this is 1, 2, 3, 4, and 5. We're going to get ABC and then continue higher, okay? So that will be all for the day. Thank you for watching, and I will speak to you again tomorrow.